Hello, everybody. So welcome to our new session, Breakthrough Lending Innovations. And today with me are honorable guests, Yarden from Say Mortgages, Nufar, Segal, Bareket from Jifiti, Yoram Bechler from IO, and Assaf Binstok from BeeEye. Hi, everybody. How are you?
Hi, Nir. Glad to be here.
Hi.
Hello.
Thank you for inviting us.
Of course, thanks for joining us. So maybe we'll go real quick around the table and you tell our viewers where you're from and what your company does real quick.
Ladies first.
Well, yeah, sure. So I'm Nufar Segal. I'm the general manager of point-of-sale financing at Jifiti. We operate in 7 markets across North America and Europe, and we help large banks primarily tackle the point-of-sale financing space.
Nufar, great. Uri, let's get there.
So, hello and shalom, everybody. I'm Yarden. I'm a founder and CEO of USA Mortgages. We are a niche lender for foreign nationals in the US. We lend money to people buying properties in the US, which are not from the US. So this is what we do, and I'm glad to be here with you guys.
Thanks, Uri. Assaf?
Hi, I'm Assaf Binstok. I'm a co-founder and CEO of BeeEye. BeeEye supplies banks and advanced fintech companies with an end-to-end modeling management platform. It means that we give every customer the ability to not develop their own infrastructure, but to utilize out-of-the-box, very advanced and customized modeling in order to promote their business results.
Okay, perfect. Thanks for that. And we'll hear all about it in a second. And Yoram?
Hi, everyone. Thank you for joining. I'm Yoram, the CEO of IO, Verified Financial Identity for Businesses. We are an award-winning Israeli fintech. We help financial service providers to digitally onboard and service business borrowers digitally. And we're delivering 80% faster risk assessment data and KYB data. We raised so far $1 million and won another $1 million from the Bird Foundation for patented innovative technology. We are now in the middle of another round. We work primarily with community banks, credit unions, and Tier 1 banks in the US. Through partnerships that we have with companies, with technology providers like Finastra and similar.
Thank you, Yoram. Thanks for that. Super impressive, undoubtedly. And maybe we'll start with you. You are leading this segment, the lending segment. How did you see the COVID-19 act, the lending ecosystem from your point of view? Maybe you'll share this with our kids.
I think the pandemic surfaced a lot of things. First, that businesses must get loans very fast in order to survive. And we have seen that the main KPI for successful lending to businesses is turnaround time. Sometimes it's even more than rates. Therefore, the processing time from the time that the customer shows up on a financial service provider's radar until they actually complete the process, collect all the data, do the risk assessment, is the key KPI for their success. And whoever do this very digitally, very automatically, loses a lot of business. So we have seen very large banks find it hard to compete with new digital lenders. We've seen a lot of community banks and credit unions find it very hard to keep the touch points during the pandemic with their members. And all are seeking a way to very, very quickly become digital, private, and very secure.
Thanks, Yoram. Thanks for this analysis. And Uri, maybe we'll take it to you. You are an expert in the mortgages space. How did you see COVID-19 situation affect on the mortgages in particular?
Yeah, so the mortgage space has changed dramatically via the pandemic. I think what we've seen, and we're working in the United States, which is the largest real estate market in the world, and back-to-back is the largest mortgage market in the world. What we saw is very dramatic movement. If I'm looking at the coin, two sides of the coin, one is the borrowers and the other is the lenders. So the borrowers, us, the people, have seen dramatic change during the pandemic. Some of us got fired and weren't able to pay our mortgage. Some of us, the lucky ones, were able to go out of the city and look for a house in the outskirts, and you needed to finance this as well. And some of us worked from the house, and we needed a bigger space. The kids made us crazy. So that changes the people's behavior, and back to back with the mortgage industry, with the lenders, which are the other side of the coin, we saw that the lenders were really basically freaking out in this pandemic. What we saw were in April now, last April, most of the lenders in the States stopped giving loans. It was crazy. You were not able to get a loan. Even processes which started, they stopped giving loans. And I totally agree with Yoram that the major KPI would be the origination period, the turnaround period. So from my perspective, it's the origination period. And what we saw that the systems from the lenders, they're using a lot of infrastructure which is back and old legacy systems, was not agile enough to support decision making in the pandemic. Yeah. And a lot of lenders basically went out of business. So they're back, but we saw a dramatic change with the lenders' attitude towards the pandemic.
I fully agree, Uri, and maybe we'll hear Assaf takes about it because, of course, there is a lot to learn. Assaf, from your position in the market, how did you see the main challenges of financial institutions, the challenges they're facing with in terms of originating loans?
So I think exactly as Uri and Yoram put it, data is king, and the ability to streamline data using advanced infrastructure to be able to capture the right data from external and internal sources and then utilize it automatically and immediately via APIs in the decision-making process and the outputs that goes to the customer in the onboarding journey is super critical. And as I can be a supplier for Uri and one of the sources of data can come from Yoram, my infrastructure would do the entire process and would have the decisioning when the origination is at the end of it. So I think that as we see it now, fintechs were first to charge, but banks and the more orthodox institutions now realize that they might lose the train if they would not catch up, and they're doing a lot of catching up, and we see that across the globe, in Latin America, in Southeast Asia that we operate in Europe, in the US. Everybody is rushing to capture the ability, not just to have data, but to actually utilize it. And I think that's a main difference between having data and utilizing it in real time.
Definitely. Data is the key factor here in the new world. And maybe Nufar, if you can add on top of that from your buy now, pay later point of view, it will be also interesting to hear your take about it.
Sure. Just are you interested in my take on data or COVID-19 and how it had affected our field? Like
COVID-19 also, of course, your kind of solutions, the buy now, pay later solutions got really accelerated with the COVID-19 situation. How did you feel it?
Yeah, well, you know what? We were lined up, I think it was around February 2020, we were lined up with 5 markets to roll out throughout that year, all in store, like big European markets, big stores lined up. And so around April and March, we were like really around the clock, over the phone with those banks that miraculously understood that they need to set up an e-commerce solution stat, asked our help to do that, and we were so lucky to actually have that push and momentum because we were able to help them instate those e-commerce solutions by reshuffling and patching and you know the Israeli magic, and that's when everything that my counterparts here talked about, real-time decisioning, which is so difficult on the European side. We're also we're working we're very deep in the US front. This is like a different market altogether in terms of real-time underwriting, real-time risk assessment. In Europe, they have like a team of a back office of like 120 people sometimes looking at manual papers. So that's where things get clunky for the e-commerce. So we were very quick on just making the pieces of the puzzle work, and the team here, this is a very, I think, kudos to the Jifiti team who really made it work for 5 markets, rolled out in 2020 with packages for e-commerce, and now the in-store is coming back for Europe, and now we're slowly going back to the in-store. So everything, is just trending simultaneously across a couple of those different pieces of the puzzle.
And Nufar, you're talking about risk assessment and ways to assess risk. Assaf, from your point of view as a company that provide different mechanisms for risk assessment, both for financial institutions and both for fintechs, how do you see the difference in the risk assessment processes in between these two entities?
I think there's a good saying, who dares wins, and fintechs dare. You see all of the guys here are, a bit braver than the orthodox bank. And banks realize that, and they're doing catching up. But you saw in every successful initiative launched that their appetite to use advanced analytics, advanced data capabilities were first movers, and then the incumbents of the market did the catching up. We see that when you look at banks now, they are very interested in exploring somewhat more difficult to replace many legacy system solutions, and therefore we do some shortcutting. We glue it together in 2 points and have them enjoy the process without exchanging their entire infrastructure. And once they realize value, their eyes like, okay, wow, I can be a fintech and I am a bank, and then they go for it. So this is where I see that, but of course, fintechs are the most quick to move in this environment.
Thanks for that, Assaf, and we will get back to you because you're dealing with international lending process, and it will be interesting to understand your take on that and how USA Mortgages, your company, simplifies this kind of international lending process to the end client.
Yeah, so first of all, when we talk about international lending, it's a complex area, okay? And when we look into it, we see that there's various challenges looking into this space. The big one, and you touched base with it with Assaf, is risk assessment. Worldwide, people have different methods of doing risk assessment and risk scoring, and no common ground for everybody to talk in the same language. So if I'm talking with an Indian person, he has his own credit system, and a Japanese person has a different credit system, as well as the Israelis. So when you want to create some common ground for this, it's a challenge, and it's really a language that everybody will speak. We at USA Mortgages believe that this is a place where we can add a lot of value and create some common ground. And we've developed a proprietary technology, which is based, as Assaf said, on data, and a lot of data, on big data, which enables us to do what we call IRLS. IRLS is an international real estate loan store. It's a proprietary technology that we use in order to have common ground and for us to be able to risk assess a person from Japan as well as a person from Italy. Okay, so this is what we do, and we're seeing very nice growth and nice demand for this. And I think what we mentioned before from the pandemic only increased the demand for that.
Yeah, and Uri, thanks for that explanation. It definitely differs when you assess a person from one location to another location. Maybe we'll ask Yoram, how does it differs when you assess the risk for financial institutions comparing assessing the risk individual, for example?
Assessing the risk and even obtaining data and understanding about an individual is very different than a business, and we handle commercial business lending. The individual lending data collection is very much ahead compared to commercial lending. With commercial lending, the financial service provider needs to do a much thorough KYB. They need to start structure, holding companies, collect data from many more sources. And as everyone said, data is the key factor in assessing risk, and many of the data sources are available only to the business. In the US, it's very customary that you ask the business to provide their tax return, their financial statement. And in a digital era that we are in now, it's very difficult to understand whether this is original, is authenticated. How do you synthesize the data from this with other pieces of data? And this is why commercial lending is very much behind compared to individual, to personal lending, to retail lending. And this is the problem that we as IO took to solve, to provide a very innovative way to collect data with the help of the business customer. We've seen a lot of solutions that just provide a nicer user experience, a nicer user interface, but you need to fundamentally change how you collect data about the business and how you synthesize and understand this in seconds, in a digital way. And I think this is the main difference. This is the main reason why we see a lot of demand for our solution.
And it's definitely a challenge. Thanks for elaborating on that. And maybe Nufar, we'll get back to you from the lender point of sale. I mean, point of sale lending. How do you see it fitting in to the consumer lending bucket?
Sure. Well, I think everything that all of us do here, I mean, all of us in this panel, and I think in the fintech industry together, it all trickles down to creating deal flow and liquidity to these big banks behind the scenes. I mean, USA Mortgages, they work with banks. I mean, eventually they create deal flow for other financial institutions behind the scenes. Same as AIO, same as BeeEye. We all, when you use the novel risk assessment that my counterparts here sell, then you actually help these financial institutions approve more applicants, approve more businesses to be able, when you do things quickly, this is all eventually translated into scalability. So I think one title that is common to all of us is how to create scalability for banks, for the larger banks. And Jifiti is not different in that regard. Point of sale lending is just one tool, is one acquisition channel for banks to onboard new borrowers, new clients. So the point of sale financing as a channel is less costly than, for example, getting people to apply for a credit card, just because credit card is saturated and point of sale lending is more new. And also from the context of things, because you're just, shopping around at the store, whether in store or online or call center, whatever, it's not like you're in a mindset of applying for a loan. Therefore, it's actually making it better from a risk standpoint, because you're not thinking about a loan too much. You're not prone to make any fraud. Therefore, this is a good thing. So point of sale lending is just under the unsecured personal loans as class. It's a good way for banks to have more borrowers. And from a risk standpoint, it's also a very valid acquisition channel, where the borrower is not as maybe well informed or thinking consciously about their decisions.
Right.
So
right. Do you see the point of sale lending as a natural evolution of the plastic cards, and that these guys will disappear and we'll use only the buy now pay later feature with point of sale lending?
Yeah, well, listen, the plastic card. So we can separate the loan vehicle from the payment vehicle. Payment is the plastic card. This is what you use to pay. But the underlying product can be revolving, can be one-time loan, can be student loan, can be split payments, and we work with all of the above. So actually, I'm a big fan of the revolving line of credit. I think it makes a lot of sense for point of sale use case. You can withdraw because you back to the store, you can see your balance, you can withdraw, you can do, I don't want to bore people with details. It's a very good fit for point of sale, but the plastic card in and of itself is a little bit of an archaic payment vehicle. Therefore, the evolution for me is just other payment vehicles. It could be a virtual card. There are many sort of virtual cards, like it could be a card scheme, closed loop card, QR codes, APIs, closed-end transactions. But that to me is the evolution. So just on the payment side of things.
I agree. Nice insight. Thank you for that. And Assaf, let's get back to you with the risk assessment mechanisms. I mean, every financial institution has its own risk assessment paradigm and has its own mechanism and business aspirations. What's your recommendation? Why they should approach a company like BeeEye to manage their risk assessment and not do it by themselves?
I think it's more questions. It's the ultimate questions in software of buy versus build, and we think that everyone needs to customize their own process. Nufar could be a user of our infrastructure, and Uri can be a user, and each of them will have a different process altogether. But why should they build the infrastructure? This is an infrastructure that has already been developed and was deployed once, time and time again, in different geographies, in different sizes of enterprises. So when we implement, we create the customization of every part of the process, of the data, of the transformations, of the features, of the model, of the algorithm, of the APIs. So I can decide that I will use Yoram APIs to use some data points. I will be able to adjust to Uri's transformation, or I will be able to extract information in the application from Nufar. But building the infrastructure, the underwriting, well, everybody's doing underwriting. In the end, it's the same PD score. So when you optimize this, you get to a place where you say, okay, the scalability comes from providing infrastructure which everybody can customize. It is deployed on-prem because everybody insisting on getting their own data and very secure in-country. You cannot, from India, you cannot move the country elsewhere, even not if they have some other data repositories. And in the US, you must have the data in the US, even if it's Amazon, AWS, US. And the same goes to Europe. And so we see that the buy versus build has already been decided on. Every bank that went to a huge project eventually went on and bought a solution. And we can provide this solution now even to the fintechs, the small, the big, the medium size, because it's the customization that counts.
Thank you, Assaf. And before we wrap it up, a quick question for you, Yoram. What are banks and alternative lenders, as Assaf spoke about them, are looking in lending fintech? How do you see that from your point of view?
They are looking for a better and faster customer experience. They are looking to reduce fraud, and the methods must be innovative because the standard methods have been used. I agree completely with Assaf. Everyone is looking for off-the-shelf solutions. No one is looking at going, maybe except for the very, very large banks. No one is going to go and start to build their own solution that is going to take years, especially after the pandemic. We see banks, and especially non-bank lenders in the US that used to work manually and do a lot of emailing with the customers, frantically looking for something that would be an off-the-shelf solution that would provide them a customer portal where they can service loans, where they can provide loans without development. Remember, just on this note, non-bank lenders in the US are many times 7 people processing papers with a few screens. And the need to make everything digital and fast, because turnaround time is the key success factor, move them to take off-the-shelf systems that are really innovative, not just another nice user interface.
I fully agree on.
and privacy is also becoming very, very important. We started to see this in Europe, and it's coming to California, to Vermont, to many states in the US. If you are not taking care of privacy of the customer, especially
security is the most important aspect here, undoubtedly. Thanks for that, Yoram. I'm sorry, we need to wrap it up. Before we wrap it up, maybe Uri, as a veteran entrepreneur, as an investor in startups, and as a veteran startupist, and it's not your first startup working in USA Mortgages. Maybe you'll tell the entrepreneurs in the audience your 2 cents on success factors when you're going to disrupt the banking industry.
Thanks, Nir. You made me feel 90 years old. I appreciate it. And for startups, it's something. Once you get older, you understand it's a no good area. But I'll talk about something which is really, it's a hot day today, and we're here in Tel Aviv, and nobody wants to get out of the aircon and go to the office. But I think the big thing would be passion. I think if you're looking to disrupt, especially in financial, especially in the financial area, you have to have a big passion for it. So go where your passion is, and if you can choose your passion to be somewhere where it's a big market and a lot of and a lot of growth in it, so you're in a good place. Add to that a niche. You cannot change the world. As Leonard said, you cannot first take Manhattan, then we take. So start with a niche. Do some quick wins, and I think good things happen to those who dare, as Assaf said.
Thank you very much, Uri, and the rest of the panelists. Appreciate being with us today, sharing your insights with our audience. So Uri, Nufar, Assaf, and Yoram, thank you very much.